You went up to 225. What's your 5-year vision of this stock?
Look, I mean, I think new highs will be made in the stock over the coming months. And ultimately, if they continue to execute and the services business gets more street cred, when there's a stock that could go to, 240, 250.
Okay, I want to look at the stock right now. They raised a dividend yesterday. They got capital deployment. Dan told me on the break they do $60 billion a year in free cash flow. This is the chart nobody knows about. And it's basically the privatization of Apple. From 2014 and 6.5 billion shares, on we go down here. I mean, that's a linear function like Intel 15 years ago. Are they going to basically privatize Apple?
Look, I think right now for them it's a balance because you got the massive buybacks that's happening right now, the dividends, but I also think M&A. And I think M&A, even though historically biggest deal they've ever done is Beats 2014, we think large M&A for Apple, specifically on the content side, will be coming over the next 6 months. And I think that's really key, what investors are focused on as the next leg in this stool.
All right, Dan, how will the iPhones actually perform in China?
Look, I mean, China's been a disaster. If you look at it in terms of the December debacle, this quarter was nothing, to write home about. But you saw a rebound starting in the last few weeks, and that's important because, in our opinion, the price cuts have really started to happen here. And I think they guided stronger for the June quarter, and that's the focus. I mean, why the stock's up today, that the New York City cab driver and every investor I talked to was bearish going into June guidance. They guide stronger than expected. That's a jaw dropper. It's about that China iPhone demand starting to peak out, as well as on price cuts, because we believe more price cuts are on the horizon. That's the key. Remember, you have 60 to 70 million iPhones coming out for an upgrade in China. That's why that's so key for Cook and Cupertino.
Okay, how's services doing? Is this going to be the kind of linchpin for Apple going forward? And in the past, and we see it in the last quarter, they're not worried about cannibalizing their businesses.
No, right now it's all about putting a fence around the backyard in terms of the install base. 900 million active iPhones, 1.4 billion active devices. We think, and this is the key, the services business on a standalone basis is worth 400 to 450 billion. That's the key of the valuation. And I think right now you're starting to see the stock get re-rated, which is why you've seen it move.
I get that. And services someday is going to be 55 or 60% of this entire pie. I get that. But what's the run rate of revenue you see out? If you're sitting right now with an institutional shareholder, a sovereign wealth fund who at the margin needs to buy more shares, they have to buy more Apple just because of indexes in that. What's your sell on services out 5 or 10 years? Is it Amazon-like? Is it AWS cloud-like? Or is there a limit to the ecosystem?
Look, I think right now we're still in that second, third inning of it moving out. And I'll compare it to AWS and Amazon in terms of that services business. Because right now that's only 15% penetrated. To put numbers around it, you're talking about $50 billion in terms of a revenue stream. And ultimately, that's on that over the course could be a $75 billion revenue.
Have you done a sum of the parts? I mean, I asked Gene Munster this and all the other sell side. What's your sum of the parts right now of Apple if they spun off services, like people say Bezos should spin off AWS? What's the sum of the parts of Apple right now?
Yeah, that would be about $450 billion in terms of that valuation.
What's that about per share?
Yeah, so if you looked on a share basis, we believe right now, if you look at call it a 200, about half of about $100 of that would be the value, $100 per share of service.